This investor bought his first property less than 10 years ago. Now he makes $12,000 per month in net cash flow, even though he lives in a high cost of living area. This could be you if you just go out there and take that first leap. Today, we're going to hear his basic, repeatable real estate investing formula that almost anyone can follow to take control of their financial future. Hey everyone, I'm Dave Meyer. I'm the head of real estate investing here at BiggerPockets. And on this show, we teach you how to achieve financial freedom through real estate. Our guest on the show today is Pratik Shah. He's an investor based in New Jersey, and Pratik discovered real estate investing and bought his first property in 2017 when he wanted a way to use the earnings that he got from his W-2 to generate additional wealth and some passive income. And that is still his philosophy 8 years later. Work a day job, save money, and buy a new property when the time is right. That approach has helped him grow to almost 20 units in 8 years, spread between 3 different markets. And today we're going to hear the lessons Pratik learned from overcoming a very difficult tenant situation with his first property, how he got comfortable investing outside the expensive market where he lives, and why keeping his day job has allowed him to scale even more quickly. Let's bring on Pratik. Pratik, welcome to the BiggerPockets podcast. Thanks so much for being here.
Thanks for having me, Dave.
Yeah, it's going to be a good time. Let's just jump right into it. Tell us a little bit about yourself and your background, how you first got into real estate.
Sure. So I'm a pharmacist by training, live in Jersey. I got into real estate. I was actually on vacation with my wife in Italy, and we met an investor on a boat to Capri. And we're just talking to people that are on the boat. And he's like, oh, I'm from Jersey as well. I'm like, look, that's same here. And he told me about what he did, and he's a real estate investor. So I got intrigued. We came back home, I connected with him, we had dinner. And long story short, fast forward there, I actually bought my first deal off of him.
How big was this place?
It was 3 bedrooms, 2 baths. So on each unit, it was top down. And I inherited Section 8 tenants. So that's a story in itself. But yeah, it was in a rough area. This was in 2017. So the market was, going high, but it was still climbing the ladder. So I got in at a great point. And honestly, I learned a ton off that house itself, whether it's managing tenants, managing toilets. You hear the toilet story.
It's always toilets.
I never knew what a flapper was until I actually had to.
When you were looking at these deals, did you have multiple options, or was this kind of like, this is the deal you should buy, or how did you pick this one?
So when I met him and I got intrigued about real estate investing, I started listening and doing my own homework, right? So I was listening to BiggerPockets, I was reading books, just understanding how to analyze deals. And then when we met for dinner and he brought his opportunity for me, he was getting to a bigger commercial space. And so I was curious, he was 1031ing some houses. And I was like, oh, okay, these numbers pencil in. And why not buy a unit from someone that I could get experience from, that could kind of hold my hand through the first deal in a sense. Since I do have a W-2 job, this wasn't my full-time gig. And it kind of helped me along the way with the goods, the bads, and the uglies. But it really got me a great, dive into the pool of real estate investing.
That's the best way to do it, man. The number one goal for your first deal should just be to learn. It's not to hit a home run.
Yeah.
Ideally, you do both, but yeah, absolutely just to learn. How did you finance it?
Well, I mean, good question. After our vacation to Capri in Italy, I did have to build up those funds back. But I can't. No, I had enough saved, and luckily, with 25% down, we were able to finance enough to purchase that house.
That makes total sense. I think it's a great way to do it. As I talk about on the show a lot, having a W-2 job does have some of its benefits, and I assume being a pharmacist, pretty solid paycheck comes in. So that's a great way to start getting into real estate investing. So you did this first deal here, Pratik. What did you do after that?
So after that, I was playing basketball with the same investor that I bought the first deal from.
You guys do a lot of fun stuff. This sounds like a good guy to hang out with.
It's all by chance, And so we're playing basketball and we're sitting on the side and he's telling me about another house that he's offloading for a 1031 exchange. And I'm like, hey, first one went all right. Let me hear it. And we talked offline, and I bought a second property off the same investor as well that I met in Capri. Another multifamily around the block from the first one.
Okay, so very nice. And how was it? Similar situation with inherited tenants? Was it Section 8?
Section 8 tenants, both up and down, both units, and these tenants were a little bit more challenging than the first unit that I bought.
Okay. What was going on here? Was it non-payment or just personalities?
Yeah, personalities more so. Section 8, you're pretty much guaranteed payment from the government, so that part was always covered. It was getting entry into the unit, the upkeep of the unit. I was constantly getting summons from the township for litter outside the house, so they weren't keeping up the unit as much as I would like them to.
Sorry to hear that, man. I mean, I know there was always risk. There's risk and reward, I think, with inheriting tenants. It's not always bad, but like these things definitely can happen. So what did you do about it? Did you hold on to the property?
No, this is too much of a headache. Like I said, I'm a W-2, don't have the time to manage bad tenants, bad properties. So I actually went and tried to sell the property and had it listed to sell in 2019.
Honestly, I love it. I think, I rant about this all the time on the show, but people say like, buy real estate and never sell. I just completely disagree. Like if there's a deal that's just not working for you, get rid of it and go do something else before you burn out or lose your money on a bad investment. It's better to recognize that this isn't working for you, whether it's financial or lifestyle wise. Like if it's not working for you, just go sell it. That's a better thing to do. So what was your plan? You went to go sell it where you're going to just 1031 or move it into something else?
Yeah, I had started going to meetups in different markets. Pennsylvania is not too far, so I started hopping into Pennsylvania as well. But to be able to do that, I wanted to offload this property.
Yeah, okay. That's a pretty good solution. Did it work out?
It would have. We were set to close on July 31st of 2019. I'll never forget the date. And on July 27th, 4 days prior, I get a call late night, and it's the fire inspector of the city calling me to let me know my house is on fire. Everyone's safe, but the entire unit is damaged. Fire, water everywhere. Firefighters are breaking in through every window. That's the call I got 3 days before closing. Obviously, the deal fell through, and so I was not able to sell a burnt down property. And that started my journey from just being a new investor to essentially a flipper in a sense, because I had to learn construction in that sense at that point.
All right. Well, clearly that's a very different business, being a buy and hold investor and having to rebuild a property from scratch. Sorry you had to go through that, but I think there's probably a lot of lessons that our audience can learn from. So help us understand this. Like, how did you go from not having any experience to rebuilding a multifamily property? Where did you even start? What are the steps that you had to go through?
Well, first, obviously, it was the insurance company. So I worked at the insurance company to line up just claims, etc. Started interviewing contractors. Had never done that before in my life, but understanding, what to ask, the right questions. The biggest stories you hear now are just the trustworthiness of contractors to really getting references from other people through forums like BiggerPockets itself. That's how I started that process. And once I locked down a contractor, working with the insurance company to make sure their systems match for, of course, payments and stuff. And from there, it was just selecting material from scratch. I mean, when I'm saying material, I mean your handles that you want in your kitchen cabinets. What type of towel holder do you want in the bathrooms? What type of flooring, etc., that meets the insurance company's needs as well from a financial standpoint, but then something aesthetically pleasing you want for your own unit as well. So it's kind of marrying the both and learning how to work within a budget of an insurance company, but within the style of the current state, right? Because the unit was about 20 years old. So you wanted to kind of transform it since you now have the ability to.
For sure, yeah.
So I spent a year until we got it completely rehabbed and updated. I had the house listed and to sell July of 2019. A year from that is the summer of COVID. And that was when the market was just starting to take off. And so fast forwarding a year, when that unit is ready to be sold, I had it listed and at a six-figure increase from what I had initially listed it for the year before.
Oh, damn. That's awesome. I mean, so I know it's hard to say because there's probably a big pain in the butt, but like all told, financially, did it actually work out better that the fire existed?
Financially, yes. I mean, I would wish this upon nobody.
It took several years off your life, I'm sure.
Oh my God.
You got a bigger check at the end of the day.
Yes. It worked out for all intents and purposes. And I learned a lot. Quite honestly, I mean, it's not a lesson I would want to learn, but in hindsight, I learned so much. It made me so much more comfortable continuing my investing journey through other markets.
Yeah.
Just from the experience I gained from just tenant management to construction to selling properties and working with insurance companies. I just learned so much just within this one deal itself.
Yeah, man. I mean, sometimes the forcing function is actually beneficial to you long term in your investing career. Like you're never going to set out and set a goal for yourself to like have to renovate a property like this when you're that early in your investing career under these exact conditions. But there is a way to spin these things that sometimes happen in real estate. If you have the right perspective, it sounds like you do, Pratik, you figure out a way to make this work for you and to help you sort of build your portfolio. So once you got through this, sounds like it took a full year.
Yeah.
But once you were almost back to square one where you wanted to be in the summer of 2019, what did you do from there?
Yeah, so during this whole time, I wasn't just sitting and managing and crying. I was networking on BiggerPockets, looking for meetups, and I found a meetup in the Lehigh Valley of Pennsylvania, which is only an hour away from me. So it wasn't too far, even though it's a different state.
Great market.
Great market. And I started going there, networking with investors. That's one thing I love to do, just talk real estate. And I met an investor there, and rinse and repeat of my first story. I networked with him and I bought a deal off of him. So my first deal in the Lehigh Valley, new market, new area, whole new clientele. And it was great because I was able to, in a sense, just like the first time, transition to a new space, but with the comfort of just having someone there to be kind of like a mentor or coach if need be. And that was my first unit in that space. Built my comfort for the area. I inherited tenants. They were great tenants this time around.
Wow, you went back to it. Okay.
I went back to it.
Touch the fire once. You're like, I'm just going to do it again.
So my wife would say I don't learn, but I like to say that I'm just more comfortable. And so
you learned how to deal with it. You knew that like you could probably deal with the worst case scenario if it happened again.
Yeah, but it was the best case. So where I took on and I learned the intricacies of the area. Every market, it has its own specifics. Lehigh Valley has a lot of inspections from townships, but I learned how to network with the inspectors, et cetera. And lo and behold, from there, I ended up buying 11 more units. So now I have 12 units in the Lehigh Valley.
Let's talk about this because I think a lot of people in today's market live in areas where finding cash flow or the type of deal that they want to buy is inaccessible, either because it's too expensive or there's just not that kind of inventory on the market. So you basically said you chose Lehigh Valley, but was there other markets that you were looking at as well?
I was looking at Indianapolis at the time and Cleveland, which are all great markets still to this date. But I think I like the aspect of still being able to self-manage to a degree because I was still smaller at the time.
Yeah.
Where I take, 10% typically is property management costs, sometimes 8%. And that was a big chunk of change. So I was able to place my own tenants. And what I've identified by placing my own tenants in that area is if I do the legwork early on and really identify the best tenant for that unit, that will make my real estate investing journey so much easier because I'm not just putting someone in there that meets, credit score, a background check, etc. I'm talking to the people. I'm getting a feel for for why they need the unit. And I think that speaks so much more in the long run because they treat your house better. They pay on time. There's so many less issues down the road where I don't really need a property manager for that area itself.
Yeah, and it creates mutual benefit, right? Like it's good for you. Obviously, you're probably going to have less turnover, less wear and tear on your property.
Yeah.
But you're also finding someone who's going to be really happy in the unit that you're offering, which is just a win-win situation. This is, I think, a really important pivot point for a lot of investors is really like getting people in the fastest and at the highest rate is not always the best situation. If you find people who are going to truly love living in your house and who are going to take care of it, that's like a mutual benefit that will make your life easier, but it also will improve your returns. You'll have fewer vacancies, you'll have less wear and tear, less maintenance costs, and that's just a benefit for everyone.
And I'll share a quick story. One of my tenants in one of the houses in the Lehigh Valley that I placed, and it's a high rental market. So once I've never had a vacancy in that area amongst all 12 homes. You have people wanting to rent the next day. And so I had a unit open. I had a bunch of applications and I went there. I'll do phone screens from my house and I'll narrow it down to maybe 5 or 10 folks I really want to move forward and have them see the unit. And I found this guy that wanted to rent the place and I did a background check and it came up with some red flags, right? And the red flags were from prior drug use and selling, etc. But when I talked to him, I really found a sense of genuine nature and authenticity from speaking with him. So I confronted him. I'm like, hey, David, I like you and I really want you to use this, rent this unit. However, I saw that there's some red flags. And he explained it to me. He's like, hey, this was in the past, full disclosure. I'm a better person. I've changed my ways. I just can't get a house because this comes up and no one will rent to me.
Yep.
And some of it's just through a conversation. That's where where I'm able to do it myself and physically see the person. I was sold on the sense of genuineness and I rented it out to him and he's one of my best tenants.
That's
He's
awesome.
put in backsplash in the kitchens, he's redone some of the flooring, painted the walls, pays on time every month. He's been there for 5 years, if not longer. And he's one of my favorite tenants, and all because I gave him a
It's
chance.
fantastic.
And that's something you're not going to get from a credit score check, a background check, et cetera, when you're checking boxes, because you would have never met those.
Yeah, well, good for you for doing the work of being a landlord and actually, meeting people, talking to people, doing the networking. We talk about it all the time, but it's a relationship business. It's a people business, and you were able to find a great tenant who likes your properties, taking care of it. That's the type of mutual benefit that we are always trying to promote here. All right, so that was what, 2021, you say?
2018 all the way till current. We're still going.
Okay.
And like I said, I was still, I was just throwing darts at a map, honestly, looking for other markets. So I did dive into another market too. And 2020 was my first year. And this is a complete left field because this is not near my backyard. It was not drivable. I still have never been to this area.
Really?
But it was in, North Carolina. There's a big army base in North Carolina. And Fayetteville.
Yeah. Okay. Yes.
Yeah.
All right.
Fort Bragg.
Yeah.
Fort Bragg.
Yeah. Nice.
And so I had a buddy, shout out to Travis. He was a buddy of mine, and he's like, he lives in Raleigh, and he's like, it's an hour away.
Did you meet him somewhere super cool, like paragliding or backcountry skiing?
I wish. This is more boring as in we work together. But it's complete opposite. But it's fun. It's funny you say that. Where we were listening, we both had mutual interests, not only from work but from real estate investing as well, or at least intrigued about it. And we heard there was this lady on BiggerPockets, and she was from Fayetteville. And he's like, "Hey, that's like an hour away from me. Let's look at this market." I'm like, "Sure." And we dove in there and have a bunch of units in Fayetteville as well now.
I want to talk to you about this though too, because when we talk about out-of-state investing, I think it's intimidating for people just to do one market that they are not intimately familiar with, but you're doing two. So tell me first why you wanted to find another market. Were there just not enough deals in the Lehigh Valley, or did you want to diversify? What led to that decision? Because it can be a lot of work.
It was honestly both. I think just increasing the deal funnel, right? And as the years progressed, it was getting harder and harder. Numbers were getting shorter and shorter in terms of cash on cash returns. You have more investors that are more interested in the market as well. So you have a lot of competition through other investors that are trying to get in. So I figured if I look for multiple markets, I have a better chance of getting some deals and increasing my deal flow.
Did you have some certain amount of units you were trying to build towards per year, or were you just basically trying to take any opportunity you saw?
Any opportunity. I didn't care much for the numbers or how many doors I had. I was more so just trying to increase the passive income. Like I mentioned, I have a W-2 that I love. I enjoy it. I have no desire to give it up. But I feel like I'm a real estate junkie. I just love crunching numbers, and when it makes sense, just why not pull the trigger, right? So it's been working out so far.
Man, this is like the kind of investing I love. It's like we're talking about keeping your W-2 job and being really analytical about investing. We share a lot of philosophy around real estate investing. So what was it like? I actually always advocate for people to go to these places before they do long distance investing. How did you get comfortable with a place you had literally never been?
It was quite a bit of anxiety at the first, where not being able to walk the unit and trusting an agent to do that. But once you build out the team and get a good rapport with the people that you're working with, you have that sense of comfort, right? And so we did a trial deal and it worked out, and that kind of was a proof of concept to purchase more and out of state as well.
In my experience, the calling of contractors and maintenance thing is probably the first thing that gives people anxiety about investing long state. But the thing I have a hard time with, not having been somewhere, is knowing what neighborhood to buy within a market. Because you can do a ton of analytics and look at all the numbers and all that and say, I know Fayetteville. I mentioned it because it's traditionally been a really strong market. But within every market, there's good neighborhoods you want to buy in. There's ones you probably want to stay away from, whether it's because it's just not the kinds of assets, there's not the right housing stock, it's not in the path of progress. So like, how did you figure that out without ever having gone?
Dave, I don't know if this speaks to you, but I'm sure it speaks to some people. I printed out a Google map of Fayetteville.
Okay, I like this. Yeah.
I went with my agent that I was working with and I told him, all right, like I printed it out for myself just to circle neighborhoods. And I got on the phone with them and we went to neighborhood because everyone knows every city in itself, no matter how small it is, has different neighborhoods, right? Different school districts. So I circled what's a good area for school districts, what streets. He was like,
okay.
He mentioned, I'm not going to say the street because I don't know if anyone lives on the street, but he's like, this street, this road, stay away
right,
from.
Yeah.
Do not go anywhere near that because that is just rough. So I would have X's on my printed out Google Maps. I would put X's on the map. And I pretty much had essentially a treasure map in a sense of where I circled and where I X'd. And I went on Zillow or go on realtor.com, wherever, and I would just look for properties within my buy box of like 3 beds, 4 beds, etc. in those circled markets on my map. And that's kind of how I went by block. Because like you mentioned, there's some areas that you just don't know that they're near manufacturing sites, so people don't want to live there. And you can't tell that always from just a Google map, right? So that's where doing your homework is very important, and also having a good relationship with your agent that is boots on the ground, that has that intricate information of the street by street knowledge is very, very important and critical.
Okay, but why have you still not gone?
Why would I? I have no. It's Fayetteville, North Carolina. I don't know. I don't know. It's worked out. I would love to go one day if the stars align. But I've learned.
You're braver than me.
I've learned. It's not needed. Honestly, if you have trust in a team, and like I said, if you do the work ahead of time before you pull the trigger and get the right team behind you, you don't really have to be there physically.
Do you notice a difference between the performance of your deals in the Lehigh Valley and Fayetteville? Are they both doing well?
Yes. And you have actually mentioned this before. So I laughed to myself when you asked me that question because you've mentioned Fayetteville before. And I've noticed that the appreciation has stalled somewhat to a point where Fayetteville was historically a cash flowing market. And with most markets over the past 5-6 years, they've all appreciated pretty much across the radar. I don't think the rents have kept up as much. So I've noticed that the rents aren't keeping as much as the appreciation. So that's analysis I need to do. I still have those units because they're doing well for me for what I bought in with. But, my IRR on my equity, I got to go back and do those equations.
Yeah. That makes sense. I mean, doesn't mean you can't buy there, but probably means you have to pay less, right? You need to just be a little more disciplined about what you're offering.
Exactly.
So it sounds like you're sort of like going through that exercise of trying to figure out like, should I hold on to this or is there a better deal? So have you done that analysis, and is there something else you're going to try and pivot to?
I have started transitioning into flipping side of things. So I've looked into another market. So sorry, Dave, I'm going to add a third market on your plate.
You're just like, okay, I work a W-2 job. I got into this to be a rental property investor. Now I have properties in 3 different markets and started flipping. It's very, it's an unusual track, but I like it. Honestly, I say it's unusual, but honestly, I'm doing the exact same thing. Like my portfolio looks pretty similar, so maybe we're more similar. But so tell me why. Like, what about the analysis led you to think flipping might be the better way for you to go right now?
Quite honestly, it's like I mentioned, I have a W-2, so I have this capital. It's harder to find long-term deals that pencil, and I've traditionally stayed to single family and small multifamilies, and with just residential buyers, I'm getting beat out. I'm still putting in offers, but I'm getting beat out to a point where it doesn't make sense to invest. But when you have someone emotionally invested into the porch or into the house and the location, that they're going to spend the extra money that they want to, which rightfully so, where it kind of beats you out as an investor. So I started working in a new market, Pittsburgh specifically. And I know you guys have mentioned this before on the podcast. And I started doing flips in the greater Pittsburgh and suburban market there.
Okay, nice. And what was the analysis there? You just did the math and that made the most sense to you?
It's the balance between passive income that's coming in from the properties that I have in the other 2 markets, and coupling that with just maybe just a different space of higher returns, even though obviously they're shorter time frame. You have capital gains taxes that are different from short-term gains versus long-term gains, of course, but in a sense of just doing construction. I kind of got, maybe that bug was put in with that Elizabeth house, but I just enjoy it. Like, being able to look at a house and seeing what type of flooring, what type of paint do you want? And to be completely honest with you, and I hate if this is a secret's going to get out, it's so much easier. I mean, I don't, once you find a deal that pencils and you find a trustworthy contractor, which is hard in itself, but once that's done, I mean, the hardest step is really figuring out what color combinations and paint palettes you want to match the flooring, really. And it's quite easy in that sense, where, 3, 4 months, if it's a typical cosmetic rehab, you could make great returns just in a short time frame.
That makes sense to me because well, knock on wood, I'm supposed to close on my first flip that I'm going to be actively involved in on Friday. So I'm also trying to do the thing because I've done some passive flipping deals before, but I'm going to try this out. How are you managing that with your time? Because like you work full time. So how much time does this take? And is it getting to the point where you're sort of like reaching a limit in terms of how much you can contribute time-wise to your portfolio?
Yeah. So, I mean, in terms of the deal flow, that's the agent. The agent brings me deals, and within a few minutes, you could kind of pencil in to see if it makes sense to dive in a little bit deeper or doesn't make sense for your returns at all. Right. And you always want to be cautious. Even if you're a trust agent, you want to do your due diligence and look at comps and analyze them and get a real comfort for if you trust those comps. But once that's done, once you lock in a deal and you actually get it, of course, after running the numbers, I have a contracting team out there that I've built a relationship with that's very trustworthy and the communication's on point. And so I've been working with them, which I really enjoy. So then it's really just picking the material and the specs of what you want. And like I mentioned, I have a W-2 job. I'm working throughout the day. I travel quite a bit for work as well. But in the evenings, I'm able to just ahead of time, if you give the contractor, this is what I want ahead of time, it helps you out because it saves the back and forth with them, right? If you give them all that stuff in a spreadsheet in advance, they can review it, and then it's just more of an execution timeline where you're more of just a project manager. That's all.
Would you do multiple at one time?
I haven't yet, but I would love to. I mean, Dave.
Okay, you're just going for it.
I'm just going for it. It's my philosophy is just jump in. You could always figure it out in the back end. But if you have the means to it, of course, if you're not completely stretching yourself. And quite honestly, I enjoy this. I mean, I actually enjoy just running numbers, running deals, seeing them come through. It's fun for me. And I think that's partly why I've been able to jump in quite a bit, where I'm thoroughly having a good time doing so.
If you're enjoying this and you're making money, just keep going for it. That's awesome. So before we get out of here, Pratik, just tell us, what's the state of your portfolio today?
Sure. So I have just under 20 units that are split between the Eastern Pennsylvania markets and North Carolina market. I dive into anything that's single family and small multifamilies, of course. And so that's been steady rolling, cash flowing just around $12,000 a month net after expenses for those units. And like I mentioned, I'm moving into flipping. I'm just trying to increase that business and that side of things. Always looking at new markets. And one thing I haven't explored yet, which I'm super interested in, is private lending.
I love private lending.
I like I mentioned, I have a W-2, so that does afford me the luxury of doing that. And I love real estate and I love crunching numbers. So if I'm able to lend to somebody to do the work where I physically may not be able to since I have a full-time job, but at the same point, understanding the risks associated with that, knowing that I understand how to crunch numbers, it gives me a good opportunity where something that I've really been intrigued in, but haven't really jumped in just yet.
Very cool. Well, is there are you working towards a unit goal or a passive income goal? Or are you just going to sort of do this for as long as you can because you enjoy it?
I would love to have one unit and to get 12,000. Dave, yeah, right? I would love that.
That's everyone's dream.
But no, I don't mind having a number of doors. I think it's more, I have an unofficial goal of 25,000, and there's no reason behind that number. But I would like 25,000 a month in cash flow. That would be nice. But that doesn't mean I'd quit my job. I truly enjoy what I do. So I just, at the end of the day, just want to keep growing. I want to keep having fun, right?
It's a great attitude.
I've understood the market of just renting and purchasing long-term investments, which has been going well. I'm trying to learn, of course, about just the flipping business. And of course, at the same time, I would love to privately lend as well.
Sweet. Well, good luck to you, Pratik. We'd love to hear from you in the future as you update and continue on this path. Maybe we'll have you back to hear how you've been growing in the next couple of years.
I appreciate it. Thanks for having me, Dave.
Thank you all so much for listening to this episode of the BiggerPockets podcast. I'm Dave Meyer. See you next time.